We are continuing with TILA Regulation Z, TILA the Godzilla, but this is very, very brief. We want to talk about the Mortgage Disclosure Improvement Act, MDIA, which is also known as the 373 Act, and it states that initial disclosures are required within 3 business days of receipt of a completed application. And it also says that the earliest consummation of a loan is on the 7th business day after the disclosures have been either delivered or placed in the mail. If redisclosure is required, the consumer must receive corrected disclosures at least 3 business days again before the loan can be consummated. So for you guys on the exam, just remember, redisclosure equals 3. The MDIA Act is 373. 3 business days, earliest it can close is 7 days, and redisclosure required another 3 days. 373 rule. APR accuracy and redisclosure. According to Regulation Z, the annual percentage rate is generally considered accurate if it does not vary above or below the APR initially disclosed by more than 1/8%, also known as 0.125, for a regular mortgage transaction, which is a 30-year fixed rate loan, or 1/4%, 0.25, for an irregular transaction, not a 30-year fixed rate loan. For the purpose of the SAFE Act, anything other than a 30-year fixed rate loan is a non-traditional type loan. An irregular transaction is defined as one that includes one or more of the following features. It may have multiple advances, irregular payment periods, or irregular payment amounts.